So let's talk about your business overall. Give us a sense, what drives your business? You're the CEO, what's on your dashboard? What'll drive your business to the upside? What'll drive it to the downside?
Sure, yeah. We are the largest food company, not just the largest meat company, largest food company in the U.S. So what drives us is the consumer, and certainly a lot of dynamics outside of the U.S. with global demand. But for us, it's the consumer in the U.S. as well as things that are happening that are just really hot in the business right now, which certainly trade is an issue that we're dealing with, and but our overall business is really driven by the consumer, and that's never changed.
Well, let's talk about trade just for a moment, because we talk about so much on this program, so much is going on in Washington even today. Are we overreacting to trade?
I think what the important thing for everybody to understand is that the U.S. is so incredibly competitive as it relates to agriculture. And so when there are issues that are creating uncertainty, that's not good for companies like Tyson, certainly not good for us. What we have to make sure that we do is focus on getting to certainty, because the uncertainty is what creates problems. When you have countries that are looking for feeding their people and having supply chains that are in place that they want to continue to maintain, any disruption to that creates turbulence. And for us, domestic protein is important, but exports are nearly as important in terms of making sure that our system is healthy.
Tom, we have a breakdown of your revenue by meat, by category, that I'm taking a look at on the Bloomberg. I know beef did well for you last quarter. We have seen lower beef prices, and so more demand for things like burgers. Chicken's been a pretty steady performer for you through the years. Prepared foods, I know you guys have been increasing in that area. And really where we're talking about that perhaps is most affected by these tariffs is pork, which is the pink bar on this particular chart here. What do you do to try to offset that, to try to mitigate some of the effect of tariffs? Because you end up with an awful lot of pork on your hands that you can't sell.
It's a great question, Julie, and for us, I'll start by talking about the consumer, because if we're going to continue to keep our products in favor, we have to be focused on innovation. So protein is a part of everybody's diet. I should say at least 95% of consumers eat protein and animal protein. So getting that in new forms and forms that the consumer wants, that it meets them where they are. So everybody has got busy lives. They want flexible alternatives. They want different types of protein that are fresh, clean alternatives. We're focused on innovation. The other thing is, it's nice about our model is that we do move across beef, pork, chicken, prepared foods, and even now, into alternative proteins, plant-based proteins. So we're not just focused on one category in particular, and I think that's what makes our company special, is that we can move between those proteins.
Well, I guess the question is, with regards to tariffs and trade, what are you doing right now to try to adjust as that is all unfolding?
Yeah, first of all, we are having conversations with our elected officials. So we are very focused on driving the right conversation, that they understand the impact for us and that it needs to be something that is dealt with and dealt with quickly. So we want agreements to be settled. Canada is our 5th largest trading partner. Mexico is our number 3 in terms of export customers. We want the deals to be settled. So we're actively engaging to make sure everybody knows that. The other thing is we are looking at new markets. So it's caused us to put new sales offices in countries that we haven't been in before, as we look to make sure that we're looking at all the world in terms of where we can export to. As countries are creating new relationships, we are too, to make sure that we're taking advantage of the entire world and our great supply that we have here in the U.S.
Tom, talk some more about these alternative proteins. I think you said plant-based proteins. How real is that? I mean, and how soon might it come? Because a lot of us are a little skeptical that we're going to want to eat plant-based proteins instead of a steak.
Yeah, well, yeah, for me, I'm probably right with you there, David, in terms of the consumption. The steak is fantastic. Everybody loves, I shouldn't say everybody, but most people love a wonderful steak. I would say that we want to make sure we follow the consumer. So consumers are changing their eating habits a little bit. And if they are going to be introducing more plant-based proteins into their diet, then we want to be right there in front of that trend. So we do focus on protein, not so much that just meat. So that is, even though it's small today, it is growing at a very fast percentage. So we want to be ahead of it, understand it, and take advantage to the extent that we can with our fantastic marketing and innovation resources.
Okay, so take us out in the future. At what point do you think plant-based proteins will constitute 20% of the revenues of Tyson?
You know, it's really hard to say. So I wish I could give you a specific number. Good question. But I think if the rapid pace of expansion continues, it will be fairly quickly. Now, 20% is a big number. We're a large company, 40 billion in sales. So I think it might take quite some time. But I do think these different types of proteins that consumers are trying to get in their diet will continue to advance. If you think about every consumer today that eats protein, they're trying to introduce more and more into their diet actively. I think that's widely known. And so I think whether it's meat that is animal raised or if it's meat that is or protein that is from plant-based sources, it's going to continue on the run that it has basically for the last 60 years.
Tom, I also want to ask you about changing practices when it comes to raising meat. I mean, I like a good juicy steak as well, but I also know the guy who raises the meat, and I buy it directly from him. And I am still in the minority in the United States, but certainly there's more attention being paid to how animals are raised. I know you guys have changed some of your practices, but of course animal welfare groups want more. They want you to stop gestation crates for pork, for example, and some of these other practices. What's that back and forth like, and how important is that to you guys?
It's very important to us, Julie. You know, for the average consumer, they are no different than, I would say, anybody that works at Tyson Foods, in that we want to make sure that we are doing things the right way. And so if there are new methods of production and new things that we can do to become better, we want to take that on, and that is really what aligns with our purpose. If you think about where we have come from, we are a large company with a heritage in chicken, but we are now transitioning and transforming into a modern food company. We know that our opportunity is to continue to raise the expectations for what we can do around the world as it relates to being the right producer. And there are some things that we know that we have done in the past that aren't relevant for the future, and whether that's animal handling and things that can be better and different, we want to attack that aggressively.
Tom, tell us about the Keystone acquisition. Why was that strategically important to Tyson, particularly given what you're talking about with plant-based proteins?
Keystone is a wonderful opportunity for us in two big ways. The first is that domestically, it is a fantastic partner for customers that we have today, and it helps us to continue to grow our relationships with those customers and be an innovation partner. Secondly, and maybe even more importantly, it's an international platform. We've got a very small international presence today outside of what we export based on production in the U.S. And so it provides us that platform to continue to grow the company in international markets, and it's very exciting from that perspective. The team is thoroughly enthused about making sure that we continue to grow. That's one of our core strategies, of course. And so international expansion is front of mind, and Keystone is a wonderful acquisition for us to do that.
Finally, Tom, I do want to ask you about margins. This has been something that's a challenge for many food companies in the U.S. right now, because you've got freight costs have been going higher because of the trucker shortage. You've been dealing with that in other countries as well, or some food companies have been. Labor costs, of course, are going up. So how's that affecting you all? Are you able to pass on some of those costs?
We are trying to pass those on, Julie, and it is difficult because nobody wants to pay more for anything. Everybody's trying to make sure that they maintain their cost structure low or even lower than it has been. And so what we are trying to do, and I think we've been relatively successful, is make sure customers understand the value that we provide as a total supplier, and that we move that into the marketplace. Consumers will need to pay for costs that are increasing, that are real. And the driver shortage that has created transportation increases is certainly a factor. But any inflation we attempt to move through to the consumer ultimately. And it goes back to the importance for making sure that our products are relevant, that we're innovating, because if we're not, if we're just undifferentiated, that makes it really hard to pass those costs on.
Right.
But that is absolutely something that we're focused on, and it's our job to make sure that we get that done.